One of the most consistent setups in my entire playbook is built from 2 levels drawn every single morning. This one simple setup allows me to trade from 9:30 a.m. to 11 a.m. EST every single day. So if you have other responsibilities, school, work, or anything else, this strategy is perfect for you, and all it requires is drawing out 2 simple levels every single morning. What is the previous day high or previous day low setup? PDH stands for previous day high, meaning that the highest point that this individual stock that you're trading reached during that previous New York session. So from 9:30 a.m. all the way to 4 p.m. EST, you're going to mark out the highest point that the stock you're trading reached during that day. And the PDL, or previous day low, ends up being the lowest point that the stock you're trading ended up reaching for that day during the previous New York session as well. So now we're going to go over the exact previous day high BNR break and retest entry checklist. So the first step of this checklist is waiting for the break above your previous day high or your previous day low. Does not matter which level, you just need to look for the break. For example, we have up here, this could be a daily candle. You're going to mark out the highest point that the stock you're trading reached during that day, as well as the lowest point it reached during that day. And now all you're doing is looking for a break above either one of these levels and your retest towards the upside for continuation, either towards the upside or, like I said, towards the downside. So once you're waiting for the break above your previous day high or previous day low, as you can see in this example, we have the break above your previous day high with the most important, a green candle close above your previous day high. If this candle would have ended up rejecting and closing back below this level with an upper wick, we are not looking to trade this stock. But now that we have this green candle above your key level, we are looking to trade this name towards the upside. So this is the first step, waiting for the actual break above your previous day high or previous day low. Now, the second step you're going to be looking for is waiting for displacement above that key level, being your previous day high for this example. So waiting for displacement above the key level that you're trading is extremely important because, as you can see, we had this breakout. Like I said, strong candle closure is an indication of strength. We want to see that at that key level. We had this displacement candle showing that we had a clear up close candle followed by a potential pullback in towards our previous day high, which we'll go over in the next step. But you're looking for this displacement above your key level. So as you guys can see, we placed in this red candle showing that we're potentially looking to come back and retest this level to push towards the upside. Now that we've waited for displacement above our key level, we can now look for the pullback into either your previous day high or previous day low. Once again, does not matter. So when looking for the pullback into either your previous day high or previous day low, you're looking for the candle that you're pulling back on. For example, this candle right here, we had our break above, once again, our displacement candle here showing that we had strong momentum above our key level and that it's not a false breakout. That'll go over here in a second, what a false breakout looks like. And then we had this retest candle here. Now, we are not entering on this retest candle. We are looking for one more step that I'll go over next to show that we actually want to hold our key level and continue pushing back towards the upside instead of getting faked out and then we just have a candle close below. So this is an example of what a false breakout would look like and exactly why you're not entering just based upon the pullback into your previous day high. So as you guys can see, we had this break above our key level, strong candle close, and then we had this candle right here showing that we were still holding our key level, just not showing any displacement above or any clear buyers stepping in. And as you guys can see displayed on this candle, we had some selling pressure stepping in, and then on this candle indicating that we closed below our previous day high level. Now we had this impulsive candle towards the downside after we had this candle close below, and no indication that we actually wanted to hold our key level, showing that this was most likely going to be a choppier day and we wouldn't have any clear direction for the day, no clear trend. Now that you've looked for the pullback into either your previous day high or previous day low, now you're waiting for strong price action at your key level, being your previous day high. So as you guys can see, we had our strong candle closure above, our displacement candle, our retest candle, and now we have one of our most important steps in this entire process being your strong price action candle, indicating that we have buyers stepping in at this key level, pushing this stock towards the upside, showing that we want to push this stock towards the upside, indicating with this lower wick here that we formed below our previous day high, showing that we were once closing below here, but the buyer stepped up, brought it all the way back up towards the upside, and closed our candle all the way up here, engulfing our previous retest candle, indicating a ton of strength at our key level. And as you guys can see, we had continuation towards the upside for a very nice trade towards the upside. And this right here is a clear example of why you want to wait for strong buyers to step in at your key level. We had our confirmation candle closing above our previous day high, our displacement candle showing that we had strong buyers stepping in and enough room above our key level to indicate a non-false breakout. And then our retest candle here, where we're coming back into our key level and pulling back for a potential move towards the upside. And that keyword potential, meaning that you can have your confirmation candle above your key level, your displacement, and your pullback into your key level. But without the strong price action at this level, this means nothing. Without your strong candle closure and indication of buyers stepping in, this means nothing. And as you guys can see, we had this push towards the downside. After having all of our criteria met, we still ended up failing this key level, and it's because you need to be waiting for the buyers to step in at your key level as presented here. Now, you might be asking yourself, where exactly do I set my stop loss in order to have a good risk to reward on this trade? So you're going to set your stop loss at a break below your retest candle, and you can just place your stop at a break below your wick level. As you guys can see right here, we have our stop loss placed just at a break below your key level, being your wick low. You might be asking yourself, where exactly will I place my profit targets in order to achieve a high risk to reward? You're going to be targeting your high of day and your higher time frame key levels. As you guys can see, we had our stop placed below here, and our targets will be at your high of day level, being the highest point that you reach during that day, or your displacement candle that we also indicated previously. Your first target will be at this key level, and then your next targets will be at a higher time frame key level, and I'll be going more into depth in that later into the video, so be sure to stick around. Now that you guys have a basic understanding of exactly what you should be looking for and how to trade the setup, let's go over some live chart examples of trades that I actually ended up taking in real time. As you guys can see, we're on our first example, Tesla for July 25th. This is a new day, so I'm sorry if I sound different. Changed up the mic a little bit too. Anyways, this is our previous day high that we have marked out on Tesla for our first example. As you guys can see at this 310 key level, we have our previous day high and our previous day low marked out, being your 300 for your previous day low and your 310 for your previous day high. So as you guys can see, coming into today, we had a break above our key level, being our previous day high, break above, and we're coming back now for the retest of this key level. So we had our candle closure above our key level at 934, or actually our candle closure above the key level came at 931. Candle close, strong candle closure above. Our displacement here at 937 indicated by this red candle pushing back towards the upside. And then now we have our retest being at 939, where we're coming back into our previous day high. So as you guys can see, we're approaching our previous day high as of now, and we're going to see how our price action develops at that key level. So as you guys can see, we had our strong price action candle at this key level. This is where we can get in for our entry, placing our stop just a break below this wick level right here, and our targets at a 2-to-1 risk to reward ratio, which comes at about our 316 key level, which as you guys can see, we can mark as our profit target, and then our first target as well being your high of day, like I mentioned previously. As you guys can see, we just came up and towards our stop loss right here, a bit of a wick below. We never ended up actually closing below our stop loss level, and as you guys can see, more buyers stepping in at this key level. So right here, we actually ended up having a candle closure below our key level. This is where we'd stop out of the position. But now what we can be looking for is the reclaim of our previous day high to now take another position for continuation towards the upside. Plus we can have a ton. Now we can be looking for the reclaim above our previous day high to show that we actually did end up wanting to hold this key level, but it's important that we always follow our stop loss. So let's see if we end up reclaiming this level here. As you guys can see right here, we ended up reclaiming our key level once again. So now we can take the exact same trade with the exact same size, but now instead of targeting high of day, we're going to target our original profit target and take none up at high of day, showing that Tesla did indeed want to end up holding this key level with this consolidation shown here. But the most important thing is that we followed our stop loss and waited for this reclaim of this key level. The reason I wanted to show you guys this example is because in real trading environments, there's not always going to be the perfect conditions. Sometimes you're going to end up getting stopped out. But the good thing about this previous day high break and retest setup is that you can end up entering on the reclaim of that level once we actually ended up having a candle closure back above. So now we can take this trade once again, like I said, targeting now your original target being your 316 key level. So as you guys can see, we just hit our final profit target here. We just closed for $356 in profit. Our first trade ended up being about a $150 loss, with our second trade being over a $450 gain. So as you guys can see, this is the power of having a high risk to reward ratio. For this example being a 3-to-1 risk to reward. So for every $100 we're risking, we're making $300 back. So as you guys can see, this is a perfect example of the break and retest setup in a real charting environment, because a lot of trading influencers would like to show you only the green trades, only the good trades that perfectly resemble the break and retest. Nothing goes wrong and they always win the trades, right? But that's not how it really is in the real trading environment. The most important thing is following your stop loss and following your system, understanding that the trade can either set back up or not. And you're okay either way. You're just observing the price action and reacting based upon what you see. So now moving on to our next example, this is going to be AMD for July 29th. So what we're going to do again, we're going to mark out our previous day high and our previous day low like we mentioned previously. So as you guys can see, we had our previous day high at our 174.70 key level, and then our previous day low at your 169.61 key level as well. So now we can go back right here. So as you guys can see, coming into the day, the very first candle on the 1 minute time frame actually ended up retesting perfectly into our previous day high, being our 174.70 key level. So this would be a bit more of an aggressive entry, but this is exactly where we would like to go on. But this is exactly where we would go long on this setup for our best risk to reward ratio on this trade and the highest probability. So as you guys can see in the pre-market, we already had a very nice move towards the upside to about 160 or 176.55, and then we had a retracement back in towards our key level being our previous day high once again. So as you guys can see, I had entered this position here. We can place our stop just to break below this wick level and our previous day high that coincide with each other, and we can actually target on this trade your 179 key level right below your 180 psychological whole number. If you guys don't know why I'm actually targeting these levels, it's because institutions tend to put their take profit orders at these key levels because they're psychological whole numbers, and they like to sell their positions at those type of numbers. So we can enter our position here targeting your 179 key level, and let's see exactly what happens. So as you guys can see, in only 11 minutes, we ended up hitting our full profit target being our 179 key level. And as of right now, we can flatten our position, selling for a $317 gain on this trade. And we only had to sit on the charts for 11 minutes. This emphasizes exactly how important this strategy is for part-time traders that can't actually be on the charts all day. We actually ended up getting done by 9:41 a.m. So if you guys have other responsibilities, school, work, or anything else, this trading strategy is the perfect strategy for you guys. Okay, now moving on to our final example for NVIDIA on July 22nd. You guys know the drill by now. We're going to be marking out our previous day high and our previous day low for NVIDIA on this day. So as you guys can see, we have our previous day high and our previous day low marked out. Our previous day high being at your 173.37 key level, and your previous day low being at your 171.43 key level. And as you guys can see in the pre-market, actually, we ended up showing a ton of weakness below your previous day low. And now in the pre-market, we're coming back to retest your previous day low being your 171.44 key level. So let's see our reaction that we actually end up having at our key level being your previous day low. So as you guys can see, the literal very first candle of market open at 9:30 a.m., we had a very strong rejection at our previous day low key level being your 171 key level, targeting your gap fill all the way below being your 164.61 key level. And let's enter the position and see exactly what happens. And as you guys can see right here, within about 20 minutes of market open, we ended up catching an incredibly nice move towards the downside. And this move ended up resulting in a $570 gain for our account and our back testing results. So as you guys can see, a very nice trade on Nvidia towards the downside. And that'll conclude our final example for the video. I hope you guys enjoyed today's video. If you enjoyed, be sure to leave a like and subscribe, and I'll catch you guys Wednesday for a brand new video.